Chris, you call the quarter a near perfect print. Why?
Well, just about every key line item of the P&L was better than expected, with the exception of the equity gains. So, it's the investment banking was better than expected, trading was better than expected, and expenses were slightly lower than expected. The comp ratio was below expectations, and the non-comp expenses were below expectations. So, from an analyst point of view, it's everything you could ask for.
Is it Goldman simply being Goldman in the sense of sort of the dominant franchise we think about from the past, or is it simply a market share or a market that's overall increasing? They're keeping their share.
Well, I think I will agree with David Solomon that we're poised for a pickup. I mean, if you look at last year, the alternative asset managers, which is a group that I cover, most of those big stocks were up, 50 to 70% last year, the Blackstones and KKRs of the world. And you look at the M&A boutiques, they were all very strong. And it's companies like Goldman and Jefferies and Morgan Stanley that kind of lagged well behind those. And so, I think the action that you're seeing in the alternative asset managers tells you, or it's anticipating a resurgence of deal making. And so, I think there.
You think we're going to get more deals? I mean, listen, the alternative asset managers, obviously private credit figures very prominently in there, continued AUM increases for them. We have not seen a lot of deal making. We have not, even at this point, seen a lot of M&A. You seem to be calling for it. Obviously, Goldman had a pretty good quarter given what are still relatively diminished volumes.
Yeah, I think there's more to come after this. I think, and you have to be realistic that geopolitical events can always knock things off course. But if you look at the amount of, for example, private equity deal making, you're roughly at 2019 levels, even though the AUM is 50-60% higher. So it's relative to what you would expect in kind of on a normalized basis, we're still kind of bouncing along at the bottom. So I think there's upside from here from a industry activity point of view.
Just teeing off of the outperformance in places like M&A and trading against J.P. Morgan, and we'll learn more about Morgan Stanley tomorrow. Chris, I wonder how much of it is environment specific or how much of it is some of the moves that David Solomon has made. I know he got a lot of grief for the consumer business, which is shrinking, the drag. But as far as what he's done, say, on asset management, I mean, is there credit here for the strategy, which appears to start to be paying off?
Oh, I think the strategy makes a world of sense, and on some level, my main complaint would be what took them so long to get to that point of view, in the sense that, immediately after the great financial crisis, they had such a great track record investing off their balance sheet, that in some ways it was a kind of obvious strategy that they should have pursued more aggressively earlier. But, I would give them credit, better a little late than never. I think Goldman has a good investing franchise. They have a capability there, and they can continue to leverage that. And they can create. They're not there yet, but they can create a kind of a Blackstone or KKR under their house.